The Bitcoin halving is less than a week away, yet you're still broke and you still don't have a plan on how to use this to your advantage. Essentially, you are clueless as to how to take advantage of this opportunity and become stinkin' freaking rich. No problem. That's why I'm here to guide you, so that you can be an advantage taker and take advantage of this opportunity, so that you can line your pockets with easy money and impress that bimbo that you've been wanting to wine and dine, so that ultimately she can one day become your baby mama. The problem is that she won't agree to be your baby mama if you can't afford to pay her top dollar for child support in the future. That said, you have to make yourself appear to be more attractive than you really are. Let's face it, the only way you'll be able to do that is by becoming a crypto millionaire, which is why you need to pay close attention to every word in this video. But you should smash the like button first and subscribe if you are new here. Otherwise, you'll be on your own, and we all know that your track record with making money and picking up the ladies kind of sucks. So let's get to it. How will the Bitcoin halving impact the crypto market? Let's get into some historical data to answer that question. Welcome to the captivating world of Bitcoin, where every 4 years, an event of significant interest takes place. The Bitcoin halving. But what exactly is this Bitcoin halving? In essence, it's a pre-programmed event in the Bitcoin network that cuts in half the reward that miners receive for adding new transactions to the blockchain. This happens approximately every 4 years, or after 210,000 blocks have been mined, and it plays a pivotal role in maintaining Bitcoin's scarcity and value. You see, Bitcoin was designed with a maximum supply of 21 million coins. This scarcity is one of the reasons why Bitcoin is often compared to gold. However, unlike gold, which is physically mined from the earth at a variable rate, Bitcoin is digitally mined at a fixed rate. This is where the concept of halving comes into play. By halving the miner's reward, the rate at which new Bitcoins are created slows down, effectively prolonging the time until all 21 million Bitcoins are in circulation. This halving mechanism ensures that Bitcoin maintains its value over time by controlling the rate of inflation within the network. The Bitcoin halving is not just a technical event, it's a spectacle that crypto enthusiasts worldwide anticipate with bated breath. Why? Because each halving event has historically been a catalyst for significant price movements. It's a period of high volatility and potential high rewards, a time when fortunes can be made or lost. The Bitcoin halving is a testament to the genius of Satoshi Nakamoto, Bitcoin's pseudonymous creator. It's a deflationary measure built into the very fabric of Bitcoin, ensuring its value in the face of endless fiat currency printing. I guess what I'm trying to say is that it protects you from Papa Powell's tendencies to press that print button. Now that we have a solid grasp of what the Bitcoin halving is, let's dive into the history and see what it has meant for the crypto market in the past. History, they say, often repeats itself. So let's take a moment to go back in time to see what happened during the previous Bitcoin halvings. Our story begins in the year 2012. This was the year of the first Bitcoin halving. Before the halving, the reward for mining a Bitcoin block was 50 Bitcoins. After the halving, this reward was sliced in half to 25 Bitcoins. This sudden decrease in supply led to a significant increase in Bitcoin's price, which soared from around $12 to over $100 in the months following the halving. Fast forward to 2016, the year of the second Bitcoin halving. This time, the reward for mining a block was reduced from 25 to 12.5 Bitcoins. Similar to the first halving, the second halving also led to a crypto bull market. In the months leading up to the halving, Bitcoin's price hovered around $400. But after the halving, the price steadily climbed, eventually reaching nearly $20,000 by the end of 2017. Then, we arrive at the most recent halving, which occurred in 2020. Here, the mining reward was further reduced to 6.25 Bitcoins per block. Again, the market reacted in a bullish manner. Prior to the halving, Bitcoin was trading at around $8,000, but by the end of 2020, the price had surged to nearly $30,000, marking an almost fourfold increase. Now you might be wondering, why did the price of Bitcoin increase following each halving? Well, the answer lies in the basic economic principle of supply and demand. When the supply of a commodity decreases while the demand remains constant, the price tends to rise. And that's exactly what happened with Bitcoin. Each halving reduced the number of new Bitcoins entering circulation, thereby creating a shortage. This shortage, combined with constant demand, pushed the price up. One more point to note is that each halving also led to increased interest in Bitcoin, as evidenced by the rise in Google searches for Bitcoin halving during these periods. This increased interest likely contributed to the bullish market reactions that followed each halving, as more people became aware of Bitcoin and started investing in it. In summary, each Bitcoin halving has historically led to a bullish market reaction. The first halving in 2012 saw Bitcoin's price increase from $12 to over $100. The second halving in 2016 led to a price surge from $400 to nearly $20,000. And the most recent halving in 2020 saw the price climb from around $8,000 to nearly $30,000. The past may not predict the future, but it gives us a foundation for educated speculation. Now let's look ahead to the upcoming halving. The countdown to the next Bitcoin halving has begun. But what can we expect this time around? The ticking of the clock is growing louder as we approach the estimated date of the next Bitcoin halving. This cyclical event, which happens roughly every 4 years, is a significant occasion in the world of cryptocurrencies. The previous halvings have had a substantial impact on Bitcoin's price, leading to significant bull markets. Can we expect the same bullish shift this time? As we look ahead to this event, it's crucial to apply the lessons we've learned from previous halvings. Our first lesson comes from the initial halving in 2012. This resulted in a bull run that saw an increase of over 9,000% in Bitcoin's price. The second halving in 2016 was followed by a similarly impressive bull market, with a rise of almost 3,000%. And let's not forget the halving of 2020, which gave us a rise of around 500%. If we take these numbers into account, it's clear that the upcoming halving could be a catalyst for another significant upswing in Bitcoin's price. But remember, past performance is not indicative of future results. And while history often rhymes, it rarely repeats itself exactly. However, the data does support a bullish prediction. The supply of Bitcoin gets cut in half during each halving, reducing the number of new coins entering the market. This reduction in supply, coupled with a steady demand, can lead to a price increase, as we've seen in the past. Furthermore, Bitcoin's stock-to-flow ratio, a measure used to evaluate the scarcity of particular commodities, increases dramatically after each halving. This increase in scarcity often correlates with a rise in price, making Bitcoin increasingly attractive as a store of value. But we must also consider the broader context. The world of cryptocurrencies has evolved significantly since the last halving. The market has matured, institutional interest has grown, and regulatory attitudes are shifting. These factors could influence the impact of the upcoming halving, making it potentially even more significant than previous ones. However, it's important to note that while the halving can lead to bullish price action, it's not an instant process. Following the previous halvings, it took an average of more than a year for Bitcoin to reach new all-time highs. So patience will be key for those anticipating the next bull run. While the future of Bitcoin remains uncertain, the anticipation builds. Will this halving follow the bullish trend of its predecessors? Each Bitcoin halving has its unique elements. What makes the upcoming one stand out? The answer lies within the context of our evolving financial ecosystem. One key player that's entered the arena since the last halving is the Bitcoin Spot Exchange-Traded Funds, or ETFs, a financial instrument that's been making waves in the world of crypto. Bitcoin ETFs allow investors to gain exposure to Bitcoin without actually owning the digital asset. This opens up the market to a wider range of investors, particularly those who are more risk-averse or who prefer more traditional investment vehicles. Not only does this increase the potential pool of Bitcoin investors, it also creates a more stable and regulated environment for Bitcoin trading. The introduction of Bitcoin Spot ETFs signifies a shift in the perception of Bitcoin and cryptocurrencies at large. The inclusion of Bitcoin in traditional financial instruments like ETFs signals recognition and acceptance of Bitcoin as a legitimate asset class by the financial establishment. This is no small feat, and it's a bullish signal for Bitcoin and the crypto market as a whole. Why is this significant for the upcoming halving? While the halving itself is a programmed event, its impact on the market is determined by a multitude of factors, including market sentiment, investor behavior, and broader economic trends. The introduction of Bitcoin Spot ETFs adds a new layer to this complex equation. With Bitcoin ETFs, we could see an increase in demand for Bitcoin as the supply decreases due to the halving. This increase in demand, coupled with a decrease in supply, could potentially drive up the price of Bitcoin. If we follow the principles of supply and demand, this could be a perfect storm for a significant price increase. Moreover, the bullish sentiment towards Bitcoin often spills over into the altcoin market. As Bitcoin rises, so too do many altcoins. Thus, a bullish trend sparked by the halving and amplified by Bitcoin Spot ETFs could create a ripple effect across the entire crypto market. With these new elements in play, the upcoming halving could create waves in the crypto market unlike any we've seen before. As we approach the next halving, the question on everyone's mind is, what will happen to the price of Bitcoin and other cryptocurrencies? Historically, Bitcoin halvings have been followed by significant price rallies. After the first halving in November 2012, Bitcoin's price soared from around $12 to over $1,000 within a year. Similarly, in the year following the second halving in July 2016, Bitcoin's price jumped from $600 to nearly $20,000. So, if history is to repeat itself, we could anticipate a significant price rally following the upcoming halving. However, it's crucial to remember that past performance doesn't guarantee future results. Factors such as market sentiment, regulatory changes, and global economic conditions can significantly influence the price action, painting a more complex picture. As for the altcoins, they have a history of following Bitcoin's price trends, but with a delay. Typically, after a Bitcoin rally, profits are taken and invested into altcoins, causing them to surge in price. It's like a domino effect, starting with Bitcoin and trickling down to the rest of the crypto market. Now let's look at some potential scenarios. If Bitcoin follows its post-halving pattern, we could see a significant price increase within a year after the halving. However, due to the unique factors surrounding this halving, such as the influence of Bitcoin spot ETFs, the price increase could potentially be even more substantial. On the other hand, if market sentiment turns bearish, or if regulatory changes put a damper on the crypto market, the price increase might be less dramatic. In a more extreme scenario, if a global economic crisis occurs, Bitcoin and other cryptocurrencies could potentially see a decrease in price, at least in the short term. It's also worth noting that the crypto market has matured significantly since the last halving. With more institutional investors and mainstream adoption, the market dynamics could play out differently this time around. In terms of time frames, based on historical data, we could expect to see significant price movements anywhere from 6 months to a year after the halving. However, given the rapidly evolving nature of the crypto market, these time frames could potentially be shorter or longer. While we can't predict the future with certainty, we can prepare for it. And preparation starts with understanding.